Hi, everybody. My name is Nithai Barzam, and I'm the Chief Operating Officer of nsKnox. We are a fintech security company, and we specialize in securing B2B payments against cyber-enabled fraud. And today, I'd like to talk to you about the treasurer's role in fighting payment fraud. I'd like to start by describing the key challenges and why fraudsters today are so successful. Then want to move into discussing how and why these risks have grown dramatically as a result of the pandemic, and how and now that so many of us are working from home. I then would like to present an approach to fighting payment fraud to protect both payments you receive and payments you make. And finally, I'd like to try and demonstrate some tools and automation that can help you doing so. So let's dive right into it. So a bit about payment fraud, I think. Most of the people on this call are professionals and are kind of familiar with the background, but still just to make sure we're all aligned. So when we speak about payment fraud, who are the targets of payment fraud? The short answer to that would be everybody. And if we want to dive into a bit more details, then according to the Association of Finance Professionals, about 4 or 5 companies are a target of payment fraud. And if you're a large organization making more than $1 billion, then unfortunately, your chances are of getting impacted increase. And then what happens when you actually get impacted? Well, obviously, the impact is significant, both in terms of the number of organizations impacted and in terms of the actual money that gets stolen. There are estimations that anything between 2 to 5% of the revenue globally actually gets stolen, which I find mind-boggling. And single incidents sometimes exceed $100 million. And that's before we've even started talking about impact related to reputation of the company and sometimes personal ramifications now that organizations are sometimes taking actions against their own employees who fell victim to fraud. Now, it's a well-known problem, but let's talk a bit about how do fraudsters do that? Electronic payment fraud is continuously evolving. The one important thing to remember about it is that this is not a hooded fraudster, 16-year-old sitting in a basement. This is more like organized crime, and sometimes it's nation funded. Fraudsters operate like top performing businesses. They're really good at what they do. They invest in technology, they invest in research and analysis, and they prioritize. They will try to attack the easier targets first. Now, we're not going to deep dive into all the attack vectors, but we typically split them into 3 categories. The first one, and I suspect the one that everybody is familiar with, is social engineering. This is everything that fraudsters are trying to do using technology and psychology to trick your employees into acting on their behalf. This includes things like vendor impersonation, like executive impersonation, with tactics such as email phishing, business email compromise, but recently, and I'll talk about a few examples, also using phone spoofing, phone hijacking, and even voice cloning. The second group is cyber attacks. This is something we're seeing significant growth in over recent years, and more so over recent months, especially after the pandemic. And this is where fraudsters are actually using pure technology into either stealing your credentials and using them to manipulate or update details in your systems, but also some specialized malicious software that targets ERP systems and payment systems, again, with the attempt to manipulate payment data. And lastly, this is the one we all hate to talk about. It's insider fraud. We don't really want to be suspecting anybody from finance or anybody from our IT departments, but unfortunately, insiders are part of the problem. They're the ones that know the system best, they know the processes, they know the controls, and they know how to bypass them. Sometimes when they have the motivation, they actually act this way, and they have the ability to cover their tracks. Let's look at some examples. The first one with social engineering. This one talks about an incident involving 2 huge companies with Google and Facebook becoming a victim of payment fraud that was actually starting from one of their suppliers called Quanta Computer. The fraudsters, under a guy by the name of Evaldas out of Lithuania, actually compromised the email system of Quanta Computer. They spent some time sitting on, the email communication between Quanta and these companies. They've learned the exchange, they've learned the language, the details, the invoices, and everything. And at some point, started playing the man in the middle, changing details in the communication. And you can guess what they changed. It was the bank account details, which resulted in with Google and Facebook sending more than $100 million into fraudulent accounts. Now, the fraudsters were smart, and some of it they have diverted into quantum computer, which allowed them to continue with this for more than 2 years. Now, the story ended well with the fraudsters getting caught, but it is said that half of the money was not recovered. Now, consider this as an interesting case because for Google and Facebook, that was an AP fraud, outgoing payment problem. But for Quanta Computer, that was an incoming payment fraud where they did not receive money they thought they're going to receive. And now the question becomes, who's to blame? Is it Google or Facebook for not checking the banking details correctly? Or is it Quanta Computer for allowing their email servers to be breached? Now, while this example discusses email, man in the middle, and business email compromise attacks, we are now witnessing more sophisticated attacks with phone spoofing and AI-based cloning. And some of you may have heard last month of an incident where a bank in Hong Kong was defrauded into sending $35 million. A representative of the bank received a phone call from a phone number he recognized. He heard a voice of the director of a company he recognized, but he was not speaking to the director. He was actually speaking to a fraudster, which provided instructions to transfer funds and ended up with $35 million getting lost. This is social engineering. For cyber attacks, first, some of us, I think, believe, we're kind of cover. We're behind our firewalls, we're behind our security measures that IT have set up for us. But just look at the statistics shared by IDC. They have conducted a survey last year and came up with mind-blowing conclusion. Almost 2 out of 3 companies surveyed in this survey actually reported that their ERP systems were hacked over the past couple of years. So we definitely need to pay attention to pure cyber attacks as well. And the story on the right-hand side is interesting as well. An executive from the Vitus Capital, a company out of the Far East, thought he's getting onto a Zoom conference. He entered his credentials thinking he's logging into the service. It turned out he was actually putting credentials on a fake site. Fraudsters got hold of the credentials and later used them to actually effect payments out of the company worth $8 million. And this actually ended with the company going down because their main investors wouldn't back up the company anymore after the incident. So again, pure cyber attacks are definitely something to be aware of. And lastly, insider fraud. Again, we hate to think somebody from within the organization will do that, but just look at the statistic from PwC. In a survey that they conducted in a report they published in 2020, they've indicated that about half of the cases of economic crimes are actually committed by or with the involvement of internal actors. So we should definitely keep an eye on that. And the story on the right-hand side in the example is with a huge conglomerate, Swedish conglomerate, ABB, global by nature, where one of their executives, actually in Treasury, in one of their subsidiaries, have stolen $103 million out of the company. And this was $103 million off the bottom line, pretty significant for ABB. And he did this 2 ways. One, fake invoices, fake suppliers, knew the system, knew the controls, bypassed them, and paid his own accounts instead of others. But the second one, which is also interesting, is he actually instructed ABB customers to pay fraudulent accounts instead of ABB. And this was only discovered after he disappeared. So quite a loss. ABB had to report this. Not good. If we try to summarize those, 3 main methods that we're seeing, I think the way to summarize this is that, outsiders and sometimes insiders and sometimes working together in collaborations will continuously try to manipulate banking details throughout the procure to pay or the funds transfer journey. Now, different companies may have slightly different processes, but at the end of the day, all of us pretty much have a process by which we onboard new payees or have a process to update their banking details. Once we do that, these become data at rest. They're stored in our ERP systems for later use. And at some point, when we receive invoices, we process invoices, payment proposals, payment runs, we actually use them to affect payments, which is sort of like the output to the system. Now, social engineering really tackles the input into your system. So this is everything with you entering the wrong details into the system. However, insider fraud and cyber attacks actually have the ability to manipulate the data after it was entered into the system. And this way, just verifying details before you save them is not going to be good enough because, pardon my French, it would be a real bummer if we've invested in validating details, have entered the correct details, however, end up paying the wrong accounts. Now, we may ask the question then, why are fraudsters so successful? How come? And the answer to that is that, most of the companies or the organizations that I work with rely on manual processes and on training to try and solve this problem, while the attackers actually are leveraging state-of-the-art technology and psychology. And the process, is only as good as the people implementing the process and is not very strong when humans are not following. And humans, we all know, are basically humans. We don't always follow process. And it doesn't have to be a bad insider that's going to do bad things. It could just be a tired employee, somebody who got distracted or forgot to do something. And even smart people get tricked by very sophisticated schemes. Just think about the Hong Kong banker that fell victim to this very sophisticated fraud. It's really hard not to follow instructions given to you by your boss or from a person with authority that you think is that person. Now, we can do a great job many, many times, but it takes just one mistake to fall. And that's all fraudsters need, one mistake to succeed. In addition to that, fraudsters that are using technology-powered attacks will bypass these manual controls and processes. As stated before, you may invest in a manual process to validate data on the input, but what happens if it changes later, either by an outsider, an insider, or malicious software? This actually brings us to a very important observation, I believe, that organizations have some internal gaps between the different units. On the one hand, you have, you as finance professionals and you're experts with a business process. You definitely are aware of fraud potential. You understand all the relevant processes for maintaining master data, for affecting payments. You know the handoffs between supply chain and procurement, your master data team, if you have one, the AP and AR teams and so on. But you're not necessarily the expert at how technically fraudsters may manipulate your systems. IT and information security teams, on the other hand, are almost like the flip side of that. They definitely understand the technical ways fraud can take place, but they don't always dive into the details of the business process, the internal communication between the different departments and team members involved. Is there a file that's being sent out? Is there additional data shared in email? Is there any other room for manipulation? And because of that, they typically provide general data security solutions, antivirus software, network security measures, and so on. Rarely do they have the capacity, the attention, or the expertise to implement specialized, business process specific solution. And as you know, fraudsters, they identify these gaps, and that's exactly what they're going to try and do, is to take advantage of any gap between the different departments and leverage specialized technology to attack the business process. Now, if this wasn't enough, then the pandemic and the resulting, work from home or hybrid models that we're seeing today has made things even worse. First, many of the finance professionals that I'm speaking with are actually finding it harder to perform their day-to-day activities. That's true in general in the remote from home age, But it also is true specifically as it relates to fraud prevention. You can't get into your boss's office for a question anymore. Managers have less control in general because they're just not seeing the employees and what they do during the day. You'll try to call a vendor and confirm their banking details, and they're not going to pick up the phone because they're not in the office. They're also working from home. So that is a big problem, which has resulted in with sometimes some of the controls actually being relaxed. In addition, nowadays we're relying on voice, email, and text messages even more than before. And we do that even for internal communication. Unfortunately, these means, again, are subject to manipulation. Moreover, the environment we work in when we work from home is more vulnerable to malicious software and to credential theft. The Wi-Fi network we're going to use at home or outside is much less secure than the network we have in the office. If you're using a remote desktop software to work remotely, then unfortunately, there are plenty of hacks that target exactly these. Employees sometimes mix between personal devices and work-related devices, which increases exposure to, again, malicious software and credential theft attempts. Now, on top of that, we find out, and statistics are actually showing that insider fraud has increased. And this is a result of, the increased pressure, the increased opportunity where people are not actually being monitored, they're not around their peers or bosses. And the fact that because of the pressure, people have started rationalizing by saying, I suffer, my organization may be successful, and so it's okay for me to take a bit. And we've seen a spike in insider fraud attempts as well. To top this off, I believe, I'm sharing sensitive personal data on a regular basis, filling health forms, providing my details to get certificates and what have you. And I find that people, in a way, have gotten used to providing these type details. And we need, as managers, to make sure that they're really careful around providing their own details, because, you may be providing certain details to one thing, and it turns out that you're using similar usernames and passwords for work-related things as well. And obviously, on top of everything we're seeing here, fraudsters are also aware of that, and they're trying to take advantage of this, as evidenced by increased fraudster activity. The FBI has issued multiple reports on increased activity with phishing attempts and business email compromise. Some other reports have indicated even 200% increase in this type of activity. In recent discussions I've had with partners from KPMG, as an example, they've indicated significant increases in malicious software attacks and impersonation attempts. So the bottom line of the pandemic and this work from home era is, it's really harder for us to maintain, the same level of security that we've gotten used to before. And fraudsters have actually increased their attempts in taking advantage of it, which puts us in a difficult position. And so, how can we, protect ourselves? How can we protect our payments? So first, I want to say I believe it's the treasurer's role to acknowledge that there's a problem, and to also acknowledge the fact that it's a big problem and a complex one. It's not just about, I have a process and I'll do training. It's not just about account validation. It's an end-to-end solution. Hopefully by now, everybody has realized that there are multiple layers involved. It's not just systems, it's also people, it's process, and it is technology. So what do we do? My recommendation is we collaborate with your IT and information security departments to solve this problem. And so the first thing that I would do is sit together with your IT and information security teams and review all relevant processes and systems. Well, today's session is not technical, and we're not going to dive into the details, but the one you'll have with your IT folks will definitely be technical. And they'll work with you to harden any computers you may be using, mobile devices, ones that are in the office, ones that are at home. They'll possibly introduce multi-factor authentication, virtual private networks that are going to make it safer for you to connect from home. and they'll secure your email systems in addition to any backend systems that they're securing anyway. So that's a really good first step, and hopefully, you've engaged with that already. But as the FBI director once said, there are two types of companies, those that have been hacked and those that will be hacked. And clearly, we should be trying to do a bit more than that. So the next layer of security or recommendations that we have is about people and process. You want to identify the key processes that relate to the procure to pay processes. You want to adjust and define enhanced processes that are more secured. And you also want to communicate these throughout the organization on a regular basis. Let's have a look at some of these, areas of focus. So the first one is about interfaces. Look at the people that are participating, at the systems they're using, and focus specifically on handovers and interfaces. Is it email? Is it file exchange? Is it interface between systems or anything else? Are all these secured? Try to look at the cracks that fraudsters may take advantage of. Next is about employees and employees that are remote and in different countries and different subsidiaries. So when possible and relevant to your line of work, try to rotate employees between headquarters and global locations. Strengthen the connection between these people. Get them to know each other personally and have some shared experiences and causes. And when the time comes for them to discuss things like sensitive financial data, they'll know each other, and the chances they fall victim to fraud are smaller. Next one's really important. Don't rush. Fraudsters will typically create a sense of urgency, but you should define the processes in a way that gives you enough time to evaluate things and make informed decisions. We're seeing this both at the personal level. There's a trend now that talks about, some sites for storefronts that are fake. And over there's, the PlayStation 5 you always wanted to get and you can't find it. And all of a sudden there's just the last one. Make the choice or it goes away. Somebody else will take it. And you're making a quick decision. Same thing happens at the corporate environment. You really need to transfer the funds by 12 p.m. Otherwise this transaction doesn't go and we cannot buy the company. We'll lose the service. We'll lose the discount. So no, you should have enough time to evaluate the detail, ensure they're correct before you effect payments. The next one is about training and education. As we all know, the risks evolve. Employees are changing, processes are changing, new systems and tools all change. New things get introduced. You should have a program to educate and train your employees repeatedly. Next one is around standardization and centralization. Well, I know it's not always possible and local variations may be required from time to time, but whenever you can standardize and centralize, please do. It will make it easier to monitor and control the activities, and it will help prevent fraud. And finally, segregation of duties. We all talk about it, but please make sure that it's actually being followed when sensitive data is entered or updated in your system and when it's confirmed later, where approvals are required, etc. Otherwise, we definitely run a higher risk of insider fraud. And if we followed, these high-level guidelines, good and establish good processes, then we're definitely going to minimize the gap. But always remember, everything we talked about is manual processes and procedures, and they're only as good as the people that will follow them. And sooner or later, someone will make a mistake. Someone may be forced to make a mistake or actually want to cut corners and commit fraud. So this is, again, not enough. So to fully protect payments, we need a bit more. And this is where specialized technology that's specifically designed to protect both incoming and outgoing payments come into play. It'll reduce human errors, it will reduce mistakes, and obviously by automating, it could also increase efficiencies and save costs. So first, let's talk a bit about incoming payments. If anybody here is asking themselves, should you protect incoming payments? After all, it may be the responsibility of the entity that's paying me. If they get defrauded, then it's their problem. They still need to pay. But then I would ask any of you, if any of your customers or business partners is defrauded and accidentally sends $1 million to a fraudster's account instead of yours, is this a concern? Now, you can't really answer right now, but here's what I'm hearing from finance professionals around the world that I talk to. It is a concern. For starters, it's always a cash flow issue. If I was expecting $1 million today and didn't receive them, by the time it's going to take to understand what happened, is it a fraud case? Is it an error? Why am I not getting paid? It may take months, and the cash flow impact could be significant. But oftentimes, I'm also hearing concern about loss of business. What happens if your customer cannot pay? They've sent the $1 million the wrong place and they don't have another million. So I heard customers negotiating significant discounts or sometimes even having to cancel a deal and not getting paid at all. And lastly, what happens if the actual fraud originated from your organization? Remember the ABB case that I shared earlier? What happens if somebody from your organization provided the wrong details? Is it your fault or their fault? What happens if somebody compromised your email system and sent out of your email server legitimate emails with wrong details? Then it may be that you're liable for the problem. Bottom line is, I think everybody should try and protect incoming payments. Now, obviously, some of the advice that I gave earlier, you cannot really be doing for your customers or business partners. You cannot control their infrastructure, and you cannot really control their processes. However, you can definitely make sure that they have your correct banking details. And how would you do that? By finding the right way to share your banking details with your customers and business partners. And when I say the right way, I mean in a way that is A, secure, but more importantly, that's verifiable and trackable. And what do we mean by that? Secure, that it's hard to manipulate. Verifiable, it means that when they get this, they actually have a way to tell that the details they've received are correct. In this way, they actually know that they're going to pay your bank account and not a fraudster's account. And trackable means that you have a way to know if they viewed the correct details and have the ability to use them. And so if they did not, maybe they're going to fall victim, but then the liability definitely shifts elsewhere. And part of what nsKnox has actually done is develop some specialized technology. We call this a bank account certificate, which is a way for you to register your bank accounts securely and share them with anybody that's paying you, be it customers, partners, anyone else, in a way that is secure and verifiable and trackable. So using something like this, you'll protect your customers and partners, you'll protect your cash flow, and you'll reduce your liability. So that's incoming. Let's move to outgoing. Now, you'll remember that we talked about the problem in the numbers of vectors and the unknown ways in which attackers can compromise your systems. We do understand that the risk is not just in the input to the system, but in fact, it's throughout the entire procure-to-pay process. And to help with that, you actually need a solution that protects the integrity of your data throughout the process. And we call this continuous validation. First thing you want to have is a solution that helps you validate the input. Simply stated, verify bank account ownership. Are the account details I've received correct? Does the account belong to the entity claims to owning this account? And so we need a secured and effective way to validate banking details we receive to ensure that only valid data is entered into our systems. And this one needs to go beyond the review of documents or trying to call the beneficiary, because unfortunately, these methods, not only are they manual, time-consuming, and error-prone, they're also very vulnerable to payment fraud. And so technology-based account validation that works domestically And internationally, globally, is really important when you onboard new beneficiaries or you receive requests to update bank details. Now, once you've entered these type banking details in your systems, you need to continuously verify and ensure the integrity of your master data. Because unfortunately, it could be manipulated by insiders or outsiders after it has been saved and stored in your systems and after it has been confirmed, but before you actually use it. And finally, when you actually use data to affect payments in your payment transactions, you want to make sure that the bank account details you use are still correct. And by doing, all this, then you've made sure that you only pay verified accounts. Now, let's shift gears here and let me try and show you a bit about how this type of technologies could actually be automated, and let's see some demonstration of some of this technology in action. So let me start by saying the first thing that we typically want to be doing is to protect our own bank accounts, to register our accounts and be able to share them with everybody else. Okay, I'm seeing here a few questions. Let's see if we can treat them. Okay, I think I've answered the questions on how to collaborate with a different team, so we'll close that one. One other question that I received was, do I see more cyber risks as more cross-border payments take place? And the answer to that is yes, for various reasons. Cross-border payments typically involve interacting with parties that you don't know. The manual processes to try and get in touch with them and validate them are even more difficult than the standard ones. Language barrier, time zone barriers, and access are always a problem. So being able to actually automate this is really helpful. And I'll show you how in a second. There was a question on validating foreign bank account details. I'm going to answer this yes. Despite the fact that foreign actually means something different for a lot of the participants here. So wherever you are, we verify both domestic and international accounts. So it could be in the US or in Canada, it could be in the UK or any of the European countries, it could be in Asia Pacific, it doesn't matter. And let's see, how this goes about. So the first thing that I talked about, if you remember, about registering your accounts and using something like a bank account certificate to protect your incoming payments. So let's assume I'm Acme PLC out of the UK. Here are my details, and I can register for a service to say, I want to get a bank account certificate. Instead of getting a bank letter that could be forged or using void checks, again, can be forged, I want to use something stronger. So I'm going to register my details. I'm going to put the contact details as well, and I'm going to register the bank account I claim to own. Now, given anybody can put anything here, as soon as I hit register, the engine behind the scenes is going to analyze my request and provide me with follow-up instructions. In this case, the instructions would be to transfer a mini payment out of that account into an nsKnox validation account. Once we go through that transaction, and by the way, this works the same way for accounts in the UK, in the US, and in China, it doesn't matter. Our technology is able to trace the transaction back and essentially get a glimpse into the know your customer detail that their bank has, that your bank has on you, or in the case of a supplier doing that their bank has on it. And once they've done this, we verify the account ownership, and we're able to generate a bank account certificate. So in the case of Acme, this bank account certificate can look like this. Now, what you'll see here is that the account details, they do appear, but they're masked. Acme PLC, they're in London, and here's some details about them, their tax ID, which is masked, and some bank account details, again, they're masked. The reason they're masked is not because we want to hide the details, but it is because we want to make sure that anybody getting this certificate actually loads it to view the details and confirm them. So let's see what happens when somebody actually loads this type bank account certificate. They don't need to be a customer of the solution. They can simply use this because you are a customer of the solution. All they need to do is drop this bank account certificate and hit validate. And when they do that, they're actually going to get the green light if everything's okay. And this is because the certificate is not only decrypted, but the secured backend is communicated with, contacted to make sure that the data is indeed correct. At this point in time, we did not only securely share the details, but we allowed anybody that received it to verify the details. And now you can see you get the DUNS number, you get the complete VAT number, the complete details of the bank account with the account number, and so on. Now you imagine that if they get the wrong document or if they search for the wrong data in here, then they're going to get the red light, which is going to be a warning sign. And to close the loop on this, when you do that, you can actually review who verified your bank account. And you'll see who was able to validate, just like I did right now, dragging and dropping, and who failed. And you could also set alerts to say, if somebody, for example, from nsKnox did not verify my bank account, I want to get an alert. And if this did not happen, you'll be notified. So this way you actually know who verified your bank account details. A way to securely share the details, a way for everybody to freely view the details and verify they're correct, and a way for you to know if they did so or not. So this takes care of incoming payment security. Now, for outgoing payment security, well, the first thing for us to do is to ask anybody that we want to be paying to provide us with a bank account certificate. And if they don't have it, then it's a very simple process for them to get one. They simply need to register and follow instructions. And we're able to verify banking details over ACH in the US, over SEPA in the EU, over SWIFT in different places. So different countries, different ways to verify globally. And once they've done this and you get the certificate, you could either drag and drop it here, or you could search for it. So let's say that you've got a new vendor called the Alpha Records and you want to search for them. You can search for them, and you can later enter their banking details to find out if they are in the system. Now, let's say the Alpha Record, they're in the US, so I can either use their domestic account number with a routing number and a bank account number, or I could search for them using their SWIFT details. Let's try this with a US routing number and account number. So if they've verified their banking details and they do have a certificate, then by searching for them, we're actually going to see that they were validated. They have a certificate, they're what's called standard validated, and they're registered under this name. We have the actual name, we have the fact that they're in the US, we have their IDs, and we also have their business address, and a positive confirmation that the Bank of America account with these details is correct. We can now save this in our systems. However, as we've said before, that's not enough. We have the correct data, but we need to make sure that it remains correct, which is why we need to automatically audit all the entries in our master data on an ongoing basis. And we could do this. I'll show you how to do this on demand using a portal. Obviously, APIs and the ability to automate this file-based activity exists as well. And you can simply upload a fresh version of your master data. And when you do that, the system will simply, actually, let's do it this way, it's going to be faster. When you synchronize your master data with a system, it's actually going to produce a changelog. It's going to compare the file that you've just submitted, and again, this could be automated, with the history of your master data. It's going to identify everything that has changed. And more importantly, it will also cross-reference these changes with the validation status of the accounts. And so when this is complete and you're going to look at the report, it's going to look like this. It's going to tell you, hey, we've added a new company in the UK. They have a new bank account as we see here, but this one is actually valid. It went through the process, it's got a certificate, and we've got all the right details. However, if something in your master data is not valid, like in Viva la Repubblica here in France, a new account with this IBAN, this one was not validated, in which case you definitely want to be investigating this before you effect any payments. Now, keep in mind that this is on an ongoing basis when your data is at rest. So no time pressure to complete payment transactions yet, which is a great time to catch all these anomalies. Similar capability exists with the ability to scan payment files. And again, you can simply drag and drop payment files into the solution to get them scanned. And in case there's an issue with a payment file, a lot of different formats are supported here. And new ones could be introduced to the system real easy. You may get these type alerts. The first one, as you see, the payment was rejected because the account is not validated at a sufficient level. You may be okay paying accounts if they were not validated before, but maybe up to a certain threshold. If the amount exceeds the threshold, then you don't want to be making this payment. And the second alert here is a payment rejected because the account is not in your master data. And you definitely don't want to be paying accounts that are not in your master data. So hopefully that made sense. That was a quick, very quick demo of how we may be using some of this technology to do some of the things I talked about. And obviously I'll be happy to tell anybody more or answer any questions that you may be having. And if we want to summarize everything, then if you are going to follow the process with your IT and information security teams, secure infrastructure, establish best practice processes, and continuously communicate and educate your teams, and add some special technology to automate security and reduce the reliance on the human factor, then I believe that you could actually replace trusting that everything's okay with knowing that they are okay. And with that, I think we only have a few minutes left, and I'd be happy to take any questions that you may have. Let's look at your questions. So there's one around how will the use of crypto/blockchain help in combating fraud? Wow, it's a very open question. And I'll just say that for certain implementation, crypto and blockchain could be helpful, given it may allow sharing of information between all the parties, making sure that everybody sees the same version of truth, so to speak. So for certain implementations, this could definitely be helpful. Having said that, there are a lot of other implementations and use cases where I think it's not going to be as helpful, and a specific solution would be required. And hopefully I've answered this. If there are any other questions, be happy to answer. And thank you, Amina, for the comments. I'm happy you enjoyed the presentation. Anybody else? Any other questions? I think we only have like 1 minute left. And otherwise, please feel free to reach out, in the future anytime. And I'd be happy to answer future questions as well. I think there is also the ability for Q&A at a later time using the platform. And thank you so much.